Welcome back. Welcome back. This is the People's Voice. I am Trey Evans, and I am the People's Voice. Thank you again for checking out the podcast this week. As always, it is greatly appreciated. As always, we thank everyone who has taken some time to listen to the podcast today. We do understand that you could be utilizing your time to do something else, so we are appreciative that you have taken that time to spend with us. As always, if this information is valuable and you find it to be enlightening and worth sharing, we ask that you subscribe to the podcast and turn on notifications. That way you will be notified when each episode is released. And we do put out a new episode each and every Friday, which is heard on all podcast platforms. And then we put a video out on YouTube every Wednesday as well for those who like to watch the podcast. But in any event, we say welcome, and welcome to the People's Voice podcast. So today, I want to get into the topic of home insurance. And I want to talk about that today because, obviously with the unfortunate events that have been taking place in California the last couple of weeks with the wildfires, there has been a lot of conversation around not only the tragedy that's taking place out there, but also the conversation around home owners insurance. And so I want to talk about that a little bit, but really I want to get into homeowners insurance and, some of the discriminatory practices of insurance coverage, especially homeowners insurance. I'll talk a little bit about, some of the, some of the more vulnerable populations that are dealing with challenges in retaining homeowners insurance and keeping homeowners insurance. And then I want to talk a little bit about some things that you, or if you know a homeowner, should look out for when you're looking into home owners insurance, and then I'll close out from there. But like I said, I wanted to talk about this because obviously the fires it's just a tragic situation. There's no two ways to look at that. From those that are multimillionaires and have houses, homes along the coast there in California, and to those, who are, just, middle class, upper middle class homeowners, lower middle class homeowners that have lost their homes. It's just a tragedy. But home insurance plays such a big role in that because the purpose of having home owners insurance, and I am a person that has homeowners insurance, you want to know that in the case of a tragedy, such as this, that you are covered to have your home replaced or have your personal items replaced. Obviously, those that have a great deal of memories and things of that nature, you can't. Nostalgia is what I was looking for. Is you can't replace those things, but to at least get a physical structure to keep you, safe from the elements and things of that nature. That's what you hope for when you have homeowners insurance. But the reality is that, for years now, the homeowners or the insurance company, the insurance industry, I should say, has been reducing their coverages for homeowners insurance, particularly when you start talking about areas such as California. And there's been a lot of, conversations about properties being dropped in parts of Texas and Florida. And I covered this in a previous podcast. But in addition to that, there is a growing number of individuals across the country that are choosing to go without homeowners insurance because it has become cost prohibitive. And I want to talk about that a little bit. But first, let me play this from News Nation. They covered, obviously, the California wildfires, but they talked to a individual CEO of a company that actually owns an insurance company, one of the smaller insurance companies. But she talked about several different things, just in terms of the type of coverage that people should have. She gave, good tips on, what you should look for in a homeowner's insurance coverage, a homeowner's insurance policy. But in this particular piece that I want to play here, she talked about the rebuilding process and what's going to happen in terms of now that those homes in, many of those homes in California have now burned to the ground. What is going to be the timetable from the time that they can get reimbursed and then, eventually build? So let me play this from News Nation, and then I'll continue, talking about this insurance discrimination. So
the problem is there's this ripple effect. We're going to see it for decades. This isn't going to be a quick fix. The insurance companies are in it to make money. And there's a new thing that the insurance commissioner did also next year, requiring that if any insurance company does any business in the state, they can't just cherry pick the lines of coverage that are profitable. They also have to include fire, which is appropriate, it should have always been that way. But now look at what happened because it wasn't that way. So that's one of the things that has to happen. But the ripple effect of this is that they're going to have to go to their reinsurer to get insurance, and then their rates are going to go up for the reinsurance. So what happens is the insurance company covers it up to a certain amount, and then the reinsurance covers it after that. The reinsurance rates with this billions of dollars of exposure, it's going to go up through the roof. So then the regular rates are going to go up. Then the insurance company is going to still need to profit because it's for profit. So then they're going to go to try to recoup their money in other ways. So we're going to see insurance go up across every state in the country because they have to recoup their money.
And I want to stop it right there because that leads perfectly into what I'm getting ready to discuss when she got into the fact of the cost of insurance and how that's going to skyrocket. And it is that very fact why you now, current today, you have millions of people that are currently without homeowners insurance. And where it becomes discriminatory, because based on the reports that are currently out, and I'll kind of talk about this here, many of the people that today are doing without homeowners insurance are typically people from disproportionate communities and backgrounds. Matter of fact, I'm reading a report here from Consumer Federation of America, and they kind of broke this down where they say currently today, 1 in 13 homeowners are uninsured. And that's approximately about 7.4% living in about 6.1 million homes. Sorry.
Men lie, women lie. The numbers don't.
Hit the wrong key there, but the numbers don't lie, right? So 1 in 13 American homeowners are uninsured. And that's about 6.1 million homes here in the United States. On top of that, and this is where you start to get into the discriminatory practices, homeowners earning under $50,000 per year are twice as likely to lack insurance compared to homeowners in general. Among lower income homeowners, 15% are without coverage. Now, I highlight that because in many sections of the country, those earning under that $50,000 typically include people of color. It goes on to say, and again, I'm reading a report here from Consumer Federation of America. It says certain demographics of homeowners are disproportionately at risk. It says 22% of Native American homeowners are at risk, 14% of Hispanic homeowners, and 11% of Black homeowners have no insurance at all.
Men lie, women lie. The numbers don't.
So going back to that clip that I just played from that insurance executive, as she was talking about what is going to happen in the future with insurance rates, we all, and when I say all, I mean all of us, if you own a home and you have insurance, our rates are going to go up as a result of what is going on in California today and have been going up based on some of the natural disasters that have been going on around the country for the last couple of years. But we are all going to, feel the effects of this. But more importantly, this is going to create even a greater gap in insurance coverages when you start talking about more vulnerable populations and disproportionate populations. In this report as well from Consumer Federation of America, it goes on to say that inequalities in who has homeowners insurance will likely widen, as I just said. It says as uninsurance disproportionately impacts Hispanics, Blacks, and Native Americans. Over time, insurance access is likely to become a key decider of who can fully reap the benefits of home ownership, including maintaining their home and building wealth. Because as many of the homeowners who are listening to this program know, and as many of you who may not know that have not owned a home yet or in the process of, if you have a mortgage on your home, your bank or your your credit union, whoever you get your mortgage through, is going to require that you have some form of insurance. And what is going to end up happening, especially when you start talking about certain areas of California, like Altadena, California, which is an historically Black community who have literally lost thousands and thousands of homes. When it becomes time to rebuild, many of these people are not going to be able to either afford the coverage to maintain their home, or to get if they currently have a mortgage on their current home that burned down. Once they rebuild, they may not be able to pay the insurance to maintain that home. And, oftentimes what ends up happening is that when insurance companies decide to drop policies or not to insure, or if the homeowner can't afford the insurance, that can lead to losing their home, or they have to go towards what is considered last resort insurance, which is usually state mandated insurance. And that insurance is oftentimes far more even expensive than many of these insurance companies that are currently providing insurance. In addition, just to kind of go through the rest of this, I'm reading an article here from Shelter Force. And in this article, one of the problems is that these insurance companies are clearly in this for the money, right? This is a for-profit business. So just in case anybody, had some thoughts about this, this is a for-profit business, okay?
All I'm doing is presenting the facts.
And so not oftentimes, what happens is when you as a home owner purchase insurance, your insurance company, especially when you start talking about the big ones, they're taking your money and they're just investing it. The insurance business is a very simple business. It's not really that difficult.
A high IQ and low information is a very dangerous combination.
It's not that, complicated what people think. Basically, these companies take money and basically they write you a policy and say that if you lose your property, we will cover you for this amount. And for us to cover you, you basically has to give us, money on a monthly basis or a yearly basis. And then that way that ensures that you're covered. It's really not that complicated of a business. But what happens is that they take that money then that you give to them on a monthly basis and they invest it. Well, where do they invest it? Well, they invest it back into the stock market. They invest it into funds. They invest it into other investment activities, because the whole purpose of their business is to make money. But in this article that I was reading here from Shelter Force, it says that last year, for example, the property casualty industry, which is the insurance industry, experienced $21.6 billion in underwriting losses, but it earned $73.9 billion in investment income. So when companies receive payments for insurance policy premiums, as I just said, those funds are invested typically long before payments for losses are made. So basically, they, even though the industry lost $21.6 billion in paying out claims, the money that they already invested had already covered that 2-3 times over. So this is all for profit, just in case anybody might have thought any differently. I want to close out just with some recommendations for those who are looking for homeowners insurance. Now, again, in states that, if you are in a state where you have been dropped, there is an insurance policy called, I guess, the last resort policy. I know in California, I think it's called the Fair Insurance, the Fair Plan. Basically, it's a plan where you can go to the state to get coverage for your home. Now, again, those state mandated or those state sponsored plans are often far more expensive than going through an insurance company. But for those of you who may be out in California who have gotten dropped, because I think I read a report, it said that I think, like, for instance, State Farm last year had already sent out notices to 72,000 homeowners saying that their insurance policies would not be renewed. So they basically got dropped. So for those of you who have been dropped, you have to go to your state website. I was going to go through all of the different states, but I'll be here all day. Go to your state website and look for, it's either called Last Resort Insurance, or sometimes it's called state sponsored insurance, and you can check out the rates there. But for those of you who are going through private companies or public companies, I should say, because most of these companies are traded on the stock market, I found a list here from Maine, the state of Maine, their government. They posted a 10 things that you should know about purchasing home insurance. So one of the things that they say here is that you need home insurance. Well, first of all, you need home insurance, right? Again, if you have a mortgage, you need home insurance. Even if you paid your home off, you should have, home owner's insurance, because, you never know what's going to happen. Number 2, it says decide how much coverage that you need. And of course, this is based on what your mortgage is, obviously, where your home is, things of that nature, what you want to cover. It says compare deductibles. Make sure that you're choosing a policy that you are comfortable paying the deductible if you make a claim. Remember, a policy with $100 deductible will cost more than one with $250 deductible. Higher deductibles may be available at a reduced price, because, basically, for those who don't know, the higher you pay in a deductible, then basically it will cost you less. The lower you pay, it'll cost you more. Let me make sure I said that right. Make sure you're choosing a policy that you're comfortable with. Remember, if a policy is $100 deductible, it will cost you more. Then, yeah, exactly. I just wanted to read back myself, because sometimes I'm talking so fast, and I don't want to make any misstatements here. It says also replacement cost, whether it's going to be actual cost or cash value. You want to look into that. Always shop around. Go on to different websites, shop around, see what the rates are, because rates do vary, because this is, again, a business, right? And the whole purpose of it is to, spur competition. So you might find rates lower at one company than from the other. It says ask your agent about discounts, basic coverages available, also where to shop. Here it says check the newspaper. This is obviously very old information, but just go online so you can check it. Read your policy carefully. And then last but not least, review your home insurance needs every year, which is very important, because the value of your home changes, your neighborhood changes. So you constantly want to be, basically taking a year, a deep dive into it every year to see where your policy stands. And if you need to change the coverages, then please do so. But that's what I wanted to talk about today. Like I said, I wanted to talk about insurance. I've seen so much coverage about, what's going on in California and with the wildfires, and the conversation about homeowners insurance. And I kind of wanted to highlight some of the pitfalls that have been a result of homeowners insurance being very expensive. And based on what we've heard from some leading experts, this is unfortunately going to become even more and more expensive in years to come. But I hope this information was valuable. As always, you can, if you'd like, you can follow up with us at the People's Voice Podcast on Instagram. Also, you can reach me at I am Trey Evans on all social media platforms. Love to hear your comments and get your feedback. But as always, dreams are not just for sleeping. Please wake up and live your dreams. My name is Trey Evans, the People's Voice. Tell somebody about the dream. Salute.